Hi guys and welcome back to Earn Save Invest. 2022 is almost coming to an end and many stocks have dropped by a huge amount. So if you are wondering which stocks you should buy for your 2023 portfolio, we have come up with a step-by-step guide to help you. So let's take a look at how you can search for good stocks. The first thing we gotta do is go to a stock screener. Stock screeners make stock selection very easy for you as you can filter out stocks that don't fit your criteria. So we have a stock screener here, and what we'll be doing is ordering all the stocks by the ticker symbol in ascending order. The link to the stock screener is provided down below in the description. Now there are many filters here that you can apply, but we are not going to play with all of them. We will only be choosing some specific criterias. In the index filter, you can choose from S&P 500 or Dow Jones, but for now we'll be selecting all the stocks available. Moving towards country, we only want American companies. The next filter is for market cap. There is a wide variety to choose from, but I personally like to invest in large cap companies because they are more stable and less risky. So for now, we will be selecting large plus. This will include all the companies that have market cap greater than $10 billion. You can also choose a dividend filter where you can select companies with specific dividend yield. We won't look at any other filter on this page. Next are fundamental filters. The first filter we will apply here is the EPS growth over past 5 years. It is generally suggested that the EPS growth over the past 5 years should be greater than 15%. We'll be explaining the reason behind applying all these filters at the ending part of this video. So if you are interested to know more about it, you can watch till end. For now, we'll just look at what filters we are gonna apply. The next filter is sales growth over the past 5 years. This is the growth in revenue generated by a company in the last 5 years. Even this value should be greater than 15%. EPS and sales revenue should go hand in hand. Then we have return on equity or ROE. Return on equity should always be greater than 20%. Current ratio is the current assets divided by current liabilities. This ratio should be greater than 2, which means that the current assets should be double than that of the current liabilities. Next is quick ratio. It is a ratio of liquid assets by current liabilities. This ratio should be greater than 1, which means that the company has sufficient liquid assets to pay off the debt. Then we have gross margin. Gross margin is the total sales revenue minus cost of goods sold divided by the total sale revenue. This term expresses how much money the company retains as a percentage. Gross margin should be greater than 20%. The next metric is operating margin. It is operating income upon net sales. It should be good if this value is greater than 10%. These are all the criteria we are going to use to find good stocks, and we have here 21 stocks that satisfy these conditions. But it does not mean that all 21 stocks are good buy. They are satisfying all the conditions, but we need to check if they are currently undervalued or not. Always buy stocks that are undervalued. So to check whether they are trading at fair price or not, we will need to bring this data to Excel. You can use copy paste to do this. Now that we have the 21 stocks and their price in Excel, we just need to bring in the intrinsic value. If you wish to calculate the intrinsic value of these stocks by yourself, we have a separate step-by-step video on how to do it. In this video, we'll be getting the intrinsic value from internet, and the website we'll be using for this is called MicroAccess. Links in description. All you need to do is go to the search bar and type the ticker symbol. Once you find the stock you are looking for, select it. Then you need to go to the valuation tab and scroll down. Here you will find the real value, which is the fair value of this stock. Then bring this value back to your Excel. Doing this for all the 21 stocks might take some time, but we have no other option. We have already got the values beforehand. Now we will create another column called the value factor. This is the current price divided by the intrinsic value. If this number is less than 1, then the stock is undervalued and you can buy it. If it is more than 1, then it is currently overvalued and you will have to wait for it to drop down. We can apply a filter here for the value to be less than 1, and now we have all the good stocks which are currently undervalued. You can explore them further to check the sectors and other parameters to decide which ones will be better for you. Don't blindly invest in these stocks just because they are satisfying all the criteria. Take a deep dive into the company, its management, raw materials used, clients, etc. to better understand the business. Now that we are done with the method for selecting stocks, let's discuss the filters we use to get the stocks. First is the earning per share. The earnings per share represent the profitability on a per share basis. So the higher the value of EPS, the more profitable the company is. So we take the 5-year average EPS and make sure that it is above 15%. One can think of this as a reflection of the company's management's capabilities to generate profit. The next is 5-year sales growth. This represents that the company's products are being sold and the sales are increasing year after year. A high value of sales indicate that the company is doing a good job and the demand increases every year. Then we consider ROE or return on equity. Return on equity ROE measures in percentage the return generated by the company, keeping the shareholders' equity in perspective. In a sense, ROE measures how successful the company's promoters are for having invested their own funds in the company. ROE is a gauge of a corporation's profitability and how efficiently it generates these profits. The higher the ROE, the better a company is at converting its equity financing into profits. This was all in this video. Hope you learned something new and interesting by watching this video. Thanks a lot for watching this video. Do like and subscribe to show your support. We'll keep making more videos on earning, saving and investing money. One stop to all your money problems. See you in the next video.